Alrighty, let's get started. Thanks everyone for joining us tonight for our webinar on high leverage, no red tape private financing you can count on. My name is Stephanie Miller. I'm private lending manager here at Marshall Reddick. I've been with the company for 7 years now, and I see a lot of familiar faces on the call, which is great. I also see a lot of new people on the call, which is awesome. So I have my contact information here on the screen. I would love to hear from each and every one of you. I spend a lot of time every day on the phone, which I love about my job. So again, please don't hesitate to reach out.
Hi everyone, thanks very much for coming to attend today. My name is Levi Mendoza. I'm an investment analyst here on the team. I work with Stephanie every day, and just like her, I love being on the call with folks that borrow money from us just like you. So we're excited to talk to you afterwards once we go through all the content regards private financing with Marshall Reddick.
Before we dive into the topic tonight, I'd like to spend a couple of minutes to go over exactly what Marshall Reddick does overall. So Marshall Reddick has 4 services that we offer. The first service is real estate brokerage, where we help people buy and sell both their primary residence as well as investment property. The second service we offer is property management, where we help people manage the investment properties in which they purchase. The third service is private lending, which we'll specifically go over tonight. And the fourth service is investment funds. So we help people invest in both mortgage investment funds as well as direct trust deeds. It's important to note that all of the markets that I have here on the screen are just markets that we have a brick and mortar office in, and therefore can help you purchase both your primary and investment property as well as manage your property. We can also lend in all of these markets as well, but we can also lend in a lot of other states that we don't actually have a brick and mortar office in. So I have highlighted on the screen here all of the different states that we can lend in. If you're actively doing business in one of the states that aren't highlighted, please give me a call. If you're, again, doing a lot of deals and we feel comfortable with the level of deals that you're doing, we may be able to work something out. So again, give me a call if you're actively purchasing in one of the states that isn't highlighted.
Awesome. So we have a lot of subject content to cover today. We're going to be going over exactly what private financing is with Marshall Reddick, how that differs from typical financing methods that I'm sure you've already heard of. What makes us different insofar as our underwriting and our no red tape approach. That'll be really important for this content. We're also going to go over each one of our most popular loan programs, what the lending process looks like from application all the way to funding. Post-funding, what our draw processes will look like for those construction-oriented loans, as well as some of our recently funded deals, common questions we get from borrowers just like you, as well as a sweet little promo code, which if you stay to the end and if you follow up with a survey, we'll be happy to distribute to you. Should give you a pretty cool discount, so stay tuned.
So Marshall Reddick offers private financing. What exactly does that mean? Well, to start right out of the gates, there are a couple of things to go over. The first being we are non-owner occupied lenders only. So unfortunately, we can't lend on any owner occupied properties. However, we have an awesome conventional loan officer who specializes in owner occupied property, and we're happy to connect you to him if owner occupied is something that you need assistance with. We just don't have the licensing, unfortunately, at Marshall Reddick to do owner occupied loans. So again, non-owner investment loans only. Also residential real estate only. So we'll typically go up to 4 units, so anything 1 to 4 units. But we can make exceptions from time to time and do small apartment buildings. So we're talking, maybe 15, 20 units. We just can't do any commercial property, right? So like your hotels, your strip malls, that type of thing. We can offer purchase, refinance, and cash out refinance options. So whether you're looking for a brand new purchase, whether you're looking to just do a rate and term refinance and replace your existing debt, or you're looking to tap into some of your equity and get some cash out, we can help in all 3 of those scenarios as well. And then we also have a non-recourse option for retirement accounts. This is super cool because not a lot of lenders do non-recourse loans. So we've been able to help many clients purchase property that they thought they had to purchase in cash if they were using their retirement account. And we've been able to help them purchase now 2 or 3 properties using leverage.
Mm-hmm.
So how exactly is private financing different from traditional financing? And going even further, how is Marshall Reddick's private financing different than other, private lenders that are out there? Well, the first thing to know is we don't sell our loans. So a lot of traditional banks, as well as other private lenders, will sell their loans to some, secondary institutionalized lender. And that's important because they not only have to adhere to their guidelines, but they also have to adhere to whoever the institutional end buyer of their loan is, whatever qualifications they have. In terms of Marshall Reddick, since we don't sell our loans, we make our own guidelines. So we don't have to adhere to anyone else's guidelines beside our own. Also, traditional lenders and other private money lenders are going to require a hard credit pull. Marshall Reddick does not require a hard credit pull. That's just irrelevant in our asset-based, collateral-based lending. Mm-hmm. Traditional lenders and other private money lenders are also going to require a personal guarantee. So the traditional bank, a conventional lender, is only going to lend to an individual, whereas other private lenders will only lend to an entity. At Marshall Reddick, we lend to both individuals and entities. And if you're borrowing within an LLC or a corporation or some kind of different entity, we do not require a personal guarantee. Whoever the entity is going to be, whoever is guaranteeing the loan. We also don't look at personal assets or financial statements. So again, traditional lenders and other private money lenders are going to be digging into your tax returns, your personal assets, your financials. We don't necessarily care about any of that. We're really only going to be looking at a bank statement to make sure that you have viable cash to actually do the deal. And lastly, substantial documentation. So our Marshall Reddick loans are essentially no doc. So our document list is extremely small, whereas the traditional lender and other private money lenders are going to give you a boatload of homework and a boatload of documentation requests. And it's going to take you a week or two just to, gather the documentation that they're asking for. So again, Marshall Reddick, we're a no doc lender, and so we're not looking for a lot of documentation.
So Stephanie had mentioned an important point that we're not going to be selling your loans to any type of institutional end buyer. That's because Marshall Reddick is a portfolio lender. So our guidelines are our own, and we will make loans that we want to keep in that portfolio. So it's built by investors and for investors, this program. So our loan guidelines are going to be respective of your needs as investors. We like to say it's a common sense approach. If the deal makes sense, then it'll make sense for us to put the capital up and do the loan. We'd like to be transparent and reliable. For instance, all of our loan programs are published and available to you, so you can review and underwrite your deal with our loan program before you even apply. And we also will let you know if a deal is going to work within our portfolio or not. Most cases it will, but we don't want to be the lender that leads you all the way to almost closing just to tell you that it won't work out. If there's a problem or if we think something won't suit our program, we'll tell you right away. But at the end of the day, I don't think that's going to be most cases, and I think we're going to be happy to put loans on any of the properties or construction projects you're looking to do. One last thing that differentiates us is our closing time frame. Because of the doc process for so many other lenders, it could take forever to get to closing. Not for us. 7 to 10 days is a very typical time frame. More is always better, but at the end of the day, we've worked with 7 to 10 days all the time, and we're happy to do that for you. So no doc, that means we have no docs at all that we want. Not true. It's common sense for us to look at things like a bank statement, but we're not going to have that hard credit pull like Stephanie mentioned. We're not going to look at your tax records going into all the way back to 2017. We're not going to run a DTI calc. We're not going to be doing anything invasive as far as your finances. And one very good added benefit and a reason why we can close so quickly is we don't require an appraisal. So when it comes to our approach, we're a collateral-based lender. We're looking at the property. The appraisal is less important because we're underwriting and evaluating the property in-house, which cuts a lot of time and offers a huge advantage to investors like you. So those are all the items that would be more relevant to us, and I'll expand more on the next slide. So when we do look at that property, what are we trying to learn? And when we look at your application, what are we trying to learn? Well, we want your bank statement because we want to know that you're going to be in the financial position to do the deal. Do you have cash for the down payment? Do you have reserves to make monthly payments? Do you have reserves to execute on your construction or renovation for that first phase? Is the collateral value of the property good? Do we see that your underwriting of the deal is robust and that it makes common sense to you too? We also want to understand whether or not you have, expansive experience doing flipping or constructing, or you have an expansive real estate rental portfolio. We want to know you as an investor, and we want to know the property and your plan for it. It's a common sense approach. All right.
So like we mentioned, we have loan programs available for all borrowers, right? So we can lend to individuals. A lot of other private money lenders out there will not lend to individuals. So again, if you're looking to do things in your individual name, we're happy to help out. We can also do entities, so an LLC, a partnership, a corporation, and we will not require a personal guarantee if you're using your entity to borrow. We can also do trusts. So family trust is a common entity that we lend to, and a super big one, foreign nationals, right? So we are able to lend to foreign nationals. We lend to a lot of people in Israel and Singapore and all over the world. And so if you are a foreign national and you're interested in borrowing, you simply only need an ITIN number, so an international tax identification number. Alternatively, if you don't have an ITIN, as long as you have an LLC that's registered in the United States, we can also lend to you there. And then also, like I mentioned, a non-recourse option for retirement accounts. So whether you have an IRA LLC or an IRA at the custodian level, whether it's through Equity Trust, Forge Trust, or some of the other custodians out there, we can also lend to those entities as well. Diving into our loan programs, we want to highlight 3 of our programs tonight. The first being the renovation program. So these are great for fix and flippers or the BRRRR investor. So BRRRR is a buzzword nowadays. It stands for buy, renovate, rent, refinance, and repeat. So whether you're fixing and flipping to sell or you're fixing and flipping to refinance, the renovation product that we offer is a great option. The next we're going to go over is new construction. So this is great for the small mom and pop builder. This is going to be ground up construction. So if you own a piece of property or a lot, we will help you go vertical. And then we also have a bridge product, which is great for the wholetailer. Again, wholesale is another buzzword nowadays, and that simply is for the investor who is purchasing a property maybe at probate or off the market through a wholesaler, and they're getting such a good deal on it that they're simply going to clean it out and put it right back on the market. So they have no intent to renovate. It's a great wholesale option. In order to access our loan programs, again, they're all available online at any given time. We're very transparent about them. You want to go to marshallreddick.com and hover over borrow and then click loan programs. Alternatively, you can go to marshallreddick.com/loan programs and find them there as well.
So once you land on that page, you're going to see, renovation loans first. This is probably our most popular program. I do far more loans in renovation than any other. And when you land on that landing page that Stephanie just shared, you're going to see our terms published live online. This makes us kind of unique compared to a lot of other hard money lenders in that you can actually download our rate card online and review what our terms look like, including APR, rate, fees, everything. So we highly encourage you to go to our website to find these items. It helps you, the borrower, take a peek at your deal and how it would work within our financing. So looking at renovation loan rate sheet for one, you can see that all of our renovation loans are 12-month terms. Just note that for any of these programs, typically in the renovation program, we do offer 6-month terms as well. Though we know that those are probably a bit short in terms of term for new borrowers. We highly recommend people just adjust to the 12-month term. But if you think you're going to get that property off the books in 6 months, and you've done it before, we're happy to do a 6-month term for you at 1.5 points versus our standard 2. Now you can see we have rates here corresponding with different leverage levels. You can see in the loan to value section. Just know that these rates, by the way, with the APR next to it, APR is just a calculation of the total loan fees annualized. So that's the total cost of the loan, interest rate and fees included. These are interest only loans, I might add. So know that you can make principal payments at any point during the loan. You don't have to. Interest only is the only requirement for your monthly payments during the loan. So these are the loan to values that we have on offer for each of our respective programs. We have acquisition funds plus renovation funds. This is what makes it a renovation loan. One important detail to note, that these acquisition funds plus your renovation funds must always be within 70% of the borrower of the underwriter opinion of ARV. So our underwriter is going to determine their ARV, and we're going to make the loan no greater than 70% of that number. So should your acquisition funds and your renovation funds all be within 70%, we'll be happy to make that loan at that corresponding interest rate. So yeah, that'll be our renovation loan program. And know that with the renovation loan, as well as the future construction loans that Stephanie will touch on, these are reimbursement style draws that you're going to be utilizing in order to get access to those renovation funds. And we'll touch more on draws in the future slide here. Oh, and 7 to 10 days to close. So know that 7 to 10 days applies primarily for this renovation loan program, as you know. This is our most popular one. Again, 80% of the loans I do are these renovation loans, so no appraisals required. We can get these done very, very fast, record time. We're always happy to help you.
Next, touching on new construction loans. Again, if you're on our website, you want to hover over borrow and click loan programs, and then want to download the new construction rate sheet. For our new construction products, they're all 12-month terms. However, we do have extensions available, right? We understand depending on your project, that construction can take a little bit longer than 12 months, especially if the city is slow in issuing your permits. And so as long as your loan is in good standing and there's some progress made on the construction, we are able to offer 6 and 12-month extensions past the original 12-month term that your loan is going to offer. Our interest rate ranges anywhere from 9 to 12%. Interest is going to be paid on a monthly basis, and your interest rate is going to be determined by what you borrow. So if you want to borrow 85% of your construction cost, that's going to run 9% interest. Whereas if you want to borrow 100% of your construction cost and therefore leverage what you're borrowing, then we can do that at 12%. However, it is important to note that in all instances, we will go up to 70% of the underwriter opinion of after construction value. So if 70% of the underwriter opinion of after construction value gets you 100% of your construction costs, great. You do must own the land unencumbered, right? So if you're purchasing a piece of property, you want to bring in the cash to actually close on the lot, and then we'll set up a cash out refinance to get you up to 100% of the construction funds that you need to do your project. But the draws are going to be released in a reimbursement style fashion. So typically the draw schedule that works for the builders that we primarily work with is the first draw is going to be released once the slab is down. The second draw would be released once trusses and framing is all up. The third would be released at rough-ins. The fourth would be released at drywall, and the fifth would be released at completion. If you need additional draws in there, we're more than happy to accommodate, but that's typically the draw schedule that's utilized with most borrowers, and therefore is what works for them. Again, U.S. citizenship is not required, not only for our new construction program, but for any of the programs that we offer. And our new construction program takes a little bit longer than the 7 to 10 days that the renovation loan takes, but still pretty quick. We'll close usually within 2 to 3 weeks. And again, that's because no appraisal is required. Our team of in-house underwriters are going to be who is going to be valuing the property, and therefore determining both the current market value of the land as well as the after construction value of the after constructed property.
Very cool. Lastly, that we wanted to touch on is bridge loans. So we see these bridge loans used in a variety of ways. Stephanie had mentioned wholesaling. There's also other reasons people would want to pick bridge loans. So if you go ahead and go to our website, you'll download the rate sheet here, and it'll take you to this rate card. So what I most often see borrowers going to use bridge loans for are both that wholesaling, but also true bridge temporary financing. Sometimes they need to have a bridge loan in place if they're waiting for a conventional loan to be underwritten and approved by their conventional lender. Sometimes they just want to replace an interest rate for a while before they get a more competitive conventional interest rate a year, 2, 3 years down the line. So there's a lot of reasons, and it's the reason why we structured these loans as such. We have 12-month and 36-month terms, and our interest rates and APR will correspond with those terms. These are also interest-only monthly payments that are made on the loan, and the loan to values are going to look a bit different. So unique to this program is that we do have an appraisal requirement here. So unlike our other loan programs that are shorter term, where we have 7 to 10 days to close, 14 to 17 days is offered to close here due to the appraisal timeframe. Normally these properties are already renovated, they're turnkey, they're looking pretty good, so we want to get a good grip of value, and we'll also perform a DSCR analysis. I'm sure y'all have definitely heard of a DSCR analysis if you've been shopping around with different private or hard money lenders. Our ratio we look for is 1%. So that means your PITI payment, or your principal, interest, taxes, and insurance on a monthly basis, is at or below 100% of market rent. So that'll be a huge underwriting guideline that we're measuring here when we approve the loan and the total loan amount. So just keep that in mind. I love the Bridge program. It's been very useful to many a borrower, and I could definitely see it getting more popular here in the coming months.
So now that we've gone through the different loan programs that we offer, what's next? What happens when you see a property that you'd like to make an offer on, but the listing agent or your real estate agent is asking for a pre-approval letter? Well, if you need a pre-approval letter, no problem, just ask. We're more than happy to provide you with one. We simply need a copy of your most recent bank statement. Again, we're not sourcing, incoming deposits or outgoing withdrawals. We're just more so looking to make sure that you have viable cash needed to do the deal. We'll need to know the loan type, right? Is it going to be a renovation loan? Is it going to be a bridge loan? We'll need the property address and as well as the offering price. The reason why we need the property address and the offer price is we're going to tailor the pre-approval letter to the specific property you're making an offer on, right? So if you're going to offer, like in this case, $625,000, we're only going to make the pre-approval letter good for $625,000. We might be willing to go up to $650,000 or $675,000, and you might be willing as the purchaser to go up there as well. But if we come out right out of the gates and show that you're approved for more than what you're offering, the seller is going to be more inclined to negotiate with you. So we're going to start at whatever price that you're using to initially offer. And if we need to go up from there, we're more than happy to revise this pre-approval letter and give it to you quickly. This takes about 30 seconds for us to populate. So we're more than happy to give you as many of these as you need. It's also important to note that we're going to provide our contact information on the bottom of the pre-approval letter, and I highly encourage you to have the listing agent or the seller give us a call, right? We're going to make them feel confident in your offer. We're going to let them know that we've reviewed your deal and that we'll have no problem closing the loan in a quick time frame. And it really just solidifies your offer and makes both the listing agent and the seller feel really good about accepting your offer.
All right, so you've gotten a pre-approval letter, you've delivered it to the seller, they've accepted your offer, now we go into the loan application. Now, at any point in time, you can call someone like Stephanie or me, you can see her name right there, but if you're looking to upload that loan application, please do go to our website and see that we have the private financing and conventional financing option. Know that if you click conventional, that'll just take you to the landing page for our preferred conventional lender. We have plenty of folks that use Marshall Reddick for different services, so it's important that you know that that exists too. But if you're looking for that private loan like those we've just discussed, you're going to click private financing right there. And from there, you'll be clicking through a short questionnaire, details that you know about your loan, purchase, refinance, whatever it is, and then you'll get dropped on our big long questionnaire. This is usually relevant to property details, makeup of the property, where it's located, what type of terms you're looking for, or bank statement or purchase contract information. It's about 5 minutes. It's not extensive at all, but remember at any point in time, if you have a question or a concern, please call me or Stephanie. We're more than happy to hop on the application with you. We do it all the time. So always feel free. Our contacts are very available.
So once you input a loan application, the next step is going through our underwriting process. So once you fill out that loan application, I will get notified, to which I will immediately reach out to you and I will connect you or assign you with an investment analyst. The investment analyst on our team is basically a liaison between underwriting and you as the borrower. And so it's important to know that your assigned investment analyst is not only going to be your point of contact throughout your entire deal, but they're also going to be your point of contact throughout any deal that you do in the future. We don't want to pass you around from person to person, and we really want to not only build a relationship with you, but we want you to build a relationship with us. And so therefore, you're going to have an assigned investment analyst who's going to get you through every single deal. Once I loop you in with an investment analyst, they're going to gather documentation, right? And so we mentioned earlier that our documentation requirements are extremely little, right? So we're going to need your purchase contract, we're going to need your scope of work if it's a renovation or a new construction project. And then we're going to want to see photos, right? We want to know how the property sits and the current state that it's in. We're also going to want you to provide borrower comps, right? So select the best 2 or 3 comps that you are deriving your after renovation value from. We want to submit those to underwriting because it gives us the best shot at underwriting coming back with the highest value possible because they're seeing the comps that you're seeing. We're also going to want to see a bank statement and your entity docs if you're borrowing through an entity, as well as your driver's license. So again, very minimal personal documentation. And then we're also going to want to see your insurance agent contact information because we're going to reach out to your insurance agent and we're going to get the insurance started. Once we gather all of your documentation, we're going to submit everything to underwriting, and underwriting is going to start valuing the property. So they're going to pull both current market value comps and they're going to pull after renovation value comps, also hopefully using the ones that you provided to us. And they're ultimately going to structure the loan within our guidelines once they valued the property, right? So we mentioned earlier that will go up to 70% of the after renovation value. So what underwriting is doing is they're pulling those comps to establish after renovation value and therefore issuing loan terms based on our guidelines. Once we issue you loan terms, you're going to say yes or no, right? Assuming that you say yes, we're going to lock up capital and then we're going to proceed to close with escrow. So it's a very quick process. The underwriting process usually takes 2 or 3 days, and it could potentially take faster as long as you're providing us the things that we need in a timely fashion.
So yay, you closed your loan, and now either you have a bridge loan and you're talking to someone like me through its life cycle, or you have a renovation and construction loan and you're curious about how you're going to be able to access those draw funds now that you're starting to work on a project. Now, as Stephanie mentioned, an analyst like myself is going to be assigned their account for the entire life cycle of the loan. We also have an auxiliary funds control team who's also going to be assisting you with your construction specifically. So one thing that we'll have you do is be introduced to that specific funds control analyst, and then they'll ask you to draft a draw schedule from your scope of work. If you've done any of these loans before or done any construction, you'll be familiar with what a draw schedule is. This is your lender draw schedule. So we want to make sure that your project is scheduled out in times in concert with the lender. That way they have an expectation of what work's going to be complete and when you hope to achieve those milestones. So they want to be able to make sure those funds are released to you as you need them. So one important note is that a lot of different lenders are going to have a type of inspector go to the property to inspect it and make sure that it's conforming with code and everything. That's not us. We do want to make sure that you are still going within legal boundaries, and the city and county inspections might be needed in that case. But for the most part, across all of these projects, all you need to provide to that funds control analyst is a photo and or video of the property, respective of the items that are complete for that draw or for that phase. Now, it's important that in that video or that list of photos that you're going to be showing and detailing which items you completed. So if you were saying that you're going to do drywall and install cabinets and you're going to put countertops on, don't just walk through the property and the kitchen all fast, but show us those cabinets and that countertop. We often see videos that could be incomplete or not, so we'll ask you for better ones, but for the most part, our borrowers do a pretty good job of giving the walkthrough and narrating their walkthrough, saying what's complete, and it makes the funds control process just that much easier. As soon as your funds control analyst has reviewed and gotten all their satisfactions completed regards that draw, we'll go ahead and send that request into the lender for the final approval, and we'll distribute those funds to you via wire transfer or however else you'd like to pick up that draw. So it's a pretty lean and easy process. I'll be there too, or any of the other investment analysts on the team. We all work together. We all like to be involved with your deal, and we want it to be as easy as possible an experience for yourself.
So now that we've gone through our overall process and what to expect through or with Marshall Reddick financing, let's go over a couple of recently funded deals so that you can visualize exactly how we structure them. So the first being a fix and flip deal. We funded a loan for someone in Rochester, Indiana. The loan amount was $177,500. The interest rate was 12%, and the monthly payment was $1,775. So again, those are interest-only payments each month, and the principal would be paid back when this borrower, goes to sell the property or refinances or however he's going to pay off the loan. You'll see at the bottom that the purchase price for the property was $80,000, but we lent that $177,500. So again, super high leverage. However, we're not just going to write a check at closing and give you as the borrower a check for $177,500, right? We want to make sure that you have some skin in the game and, the money's actually going towards the project. So you'll see that in this instance, we released $67,500 of the borrower's $80,000 purchase price. So they had to bring in $12,500 to close, plus closing costs. And then now they have to go and get the first phase of the renovation done. So after they've done the first $20,000 worth of work, they'll send us a walkthrough video, photos, evidence of everything that has been completed thus far, and then we'll release the first draw to reimburse them for that. They'll then take that money to get the second phase done, and so on and so forth. So again, very high leverage, very doable for the borrower, and very reasonable terms. The next deal I want to highlight is a recently funded new construction deal, right? So this was a $250,000 loan amount. The interest rate was 9%, so very competitive, a little bit lower than our last example. And the monthly payment was $1,875. So again, interest-only payments, and the principal will be paid back at the end via a balloon. Although we lent this borrower $250,000, we released nothing at closing, right? So this borrower had already purchased a piece of property, a lot, and his permits were ready to go. And so we funded this $250,000 loan, but the entire $250,000 is sitting in escrow. So the borrower now is working on getting the slab down, in which will then release the first draw of $94,000, and then he'll take that money to get to the second phase, and so on and so forth. So again, very high leverage, very reasonable in terms of what the borrower can expect, and very doable.
Very, very cool. So I know that we probably all have many questions, and I can imagine there's some in the chat now. We have a lot of frequently asked questions that we're getting on a daily basis, both Stephanie and myself. One of which being, do we offer owner-occupied loans? And if you've been paying attention, you should know, but the answer is no, we do not offer owner-occupied loans. That would be more of a conventional loan that you're looking for. It is non-owner occupied only. So these are investment purpose, commercial purpose loans. I said commercial purpose. Does that mean we offer commercial loans? No, we do not offer commercial loans either. These are business purpose loans. But if you have a property that's like a strip mall, or if it's maybe a high unit apartment building that's classified as commercial, we're just not, organized in order to do those types of loans, nor are we kind of licensed in that area. So we don't offer commercial loans, unfortunately. It's 1 to 4 family residential only. I really hope there's loan brokers on the call today, but do we work with loan brokers? The answer is a resounding yes. If you have a couple of clients and they have unique borrowing situations and you need our assistance, we'd love to talk to you. We'd love to learn about your clients and what types of loans that they've done before and why they might need something from Marshall Reddick Private Financing. So yes, please, all loan brokers are very, very welcome to come talk to us. Now, can we get a non-recourse loan? Again, as you've been paying attention, the answer is a resounding yes. But can you do that as a non-retirement account? That answer is no. So if you're looking for non-recourse, just know that the borrowing entity must be some form of retirement account, whether that's a self-directed IRA, 401k, that needs to be the case. We're just unfortunately unable due to IRS rules to lend to have loan recourse on a retirement account, so they qualify for non-recourse. Now, a big question that I get pretty much daily, where does Marshall Reddick get the money to originate these loans? As mentioned, we're a portfolio lender, so we operate our own private mortgage fund within walls of Marshall Reddick Real Estate here in Newport Beach. That's a big lender with us that absorbs many of our loans and takes care of a lot of borrowers. We also have private equity partners who own and fund loans directly on our website. So we get our capital from many means, and we do quite a lot of volume. We have plenty in our network who are always looking to fund new loans, principally the mortgage fund. So those are our biggest questions that we probably see on a day-to-day basis.
So before we wrap up our presentation, I'd like to give a promo code out to everyone. So we would love for you to give us a try. You have nothing to lose. I guess the only thing you have to gain is a cheap origination on your first go around. So if you'd like to do your first loan with us, we'd like to do that for you and give you a half point off of your first transaction. So again, if you're interested in getting started, give Levi or myself a call, use the promo code No Red Tape, and we'd be more than happy to give you a discount on your first transaction. We have lent to many borrowers who had a previous relationship with another lender, and all it took was doing one deal with us, and they've moved everything over to us. So you won't be disappointed. Give us a try. You have nothing to lose.
And if you would please, we ask all of you, we have an exit survey, super duper short, and this is kind of your, access to that promo code, No Red Tape. So if you'd please complete this exit survey, we'd love to hear your feedback, and we'd love to hear your current situation. Are you looking to do a loan soon? Do you have any projects on the horizon? Or are you creating ideas about new projects? We'd love to hear that. Please give us as much feedback as you'd like. And of course, reach out to us directly after this call if you're looking to do something immediately.
And with that, thank you so much for joining tonight. Again, my name's Stephanie Miller. Appreciate Levi's assistance tonight. Both of our contact information is on the screen. So again, please don't hesitate to reach out. We'd love to answer any questions, have an introductory call, and we look forward to working with those of you on the call tonight who would like to proceed with private financing. So thanks again, and I hope everyone has a good night.
Thanks very much, everyone. Good night.